What's going on, guys? Brian's here. Today is Tuesday, October 19th, 2021, and the market is closed. This is a continuation or part 2 to the video that I just uploaded on the easiest way and probably the most efficient way to draw accurate supply and demand zones on your charts. So rolling right into it, this is exactly where we left off, and I mentioned I was going to talk about Tesla, Apple, NVDA, and Facebook as to show you guys some more case studies for individual tickers in case you don't trade the SPY. So here we're looking at the volume profile study. Link is in the description to this custom TOS study. And in case you have not seen the first part of this video, I highly suggest it. But if you don't, just double click this right here after you've installed the study. I set the opacity to 100%. That way we can see it. It's very vibrant. And then in the appearance tab, you just come to the appearance and I turns the transparency of everything all the way up to 100%. So that way we can't see the candlesticks because we just want to pay attention to the high concentration volume nodes on the chart, and that's how we're going to draw out our supply and demand zones. So as you can see, we already did it on the SPY. So let's jump over to something like QQQ, which would be the ETF for the NASDAQ, and let's plot some zones on the chart. Let's keep this rolling right here. So I'm going to pay attention to this area right here. I already have the VPOCs to save time on this video. High concentration of volume. It's also encompassing the entire value area. So that's a good one there. Let's duplicate this. Let's actually drag this right here, put this right there. And why am I choosing this spot? We zoom in, we can see, let's just stretch this chart. We can see this is the highest concentration of volume for that day. Even though this whole thing is the value area is a representation of 68% of all the volume for that day, which is one standard deviation. Some people use 70%, I use 68%. So if you're using the same study that I tweaked from Thinkorswim, just know you're going to be using 68%. But for our demand and supply zones, we're actually trying to isolate the highest concentration of volume, which would be right there. So let's duplicate this zone and let's move this up to right here. Would also be a good fresh demand zone. I'm also trying to plot out the most fresh ones, or the ones that are probably going to come into play again soon. After I draw those, actually let's put really strong one, which would be obviously the one all the way at the bottom of the chart here, because this is a fresh demand zone. It's at the bottom of the chart, and it's also a very strong fresh VPOC, which is the virgin point of control. So put that right there. I'm not gonna bother changing the colors in this video because I want this one to be a little bit shorter than the first one. So here we would have our levels, and obviously we would trade using the candlesticks. I trade using candlesticks, but I like to plot the levels on not looking at the candlesticks, because the moment we look at the candlesticks, it ends up affecting where we're going to draw the demand zones out, and I want to pay attention to just volume. So that the whole point of this is to leave the subjectivity out of it and focus on what would be considered a fact. We're drawing the zones around where there was the highest concentration of volume for these days. That's factual, which means it's non-discretionary. So moving right along now, let's jump to Tesla. And here we have a clean chart. So to make some sense of this, let's jump here, turn off all the candlesticks again, and now we have this chart. So if we jump back to, jump back in time, and we actually were to take this method, which means we'll draw this point of control right here. Don't worry about making it exactly to the correct penny, by the way. It doesn't have to be. Sometimes you can round these things off. Change the color, make it a little bit thick, and we'll put this as a POC. At this point, this would have been a virgin point of control, but let's disregard it being virgin for now. And then next, let's draw a supply zone at this point right over this level. And then let's jump. I'm actually going to make this one red because I think it's important to see for this example. So come here, change the opacity, make it about 75%, press OK. And now let's jump to our candlesticks. Now look at the type of price action that happens. Here we have this really strong day on Tesla, but then it ends up having a lot of volume up here, thus creating supply. We also had this virgin point of control. The following day, Tesla opens up down here, and then it shoots up right into this supply zone. Now this is usually retail traders that are up here buying, and this is an area of a lot of liquidity. So if you are a large institution, and in this 15 minutes there was 1.6 million shares traded. So if you're a large institution looking to get rid of your inventory, this is the perfect place for you to just dump a lot of orders onto the market, and there's going to be a lot of people buying, unaware of the fact that they're buying in this supply. You don't want to be taking these types of trades if you are bullish into supply. On top of that, there was this virgin point of control, so this was a clear, easy place to take a short, and you can have a stop loss over the previous candle or over the supply zone itself. Each trader is different and each person has their own level of risk. So that's not what this video is about. It's just about identifying the zones and then knowing where to take the trade. You leave the risk onto your style, your account size, whether you're trading options or shares, whether you like to scale in or out, whether you use a tier method. Everybody's different, so I'm not going to necessarily talk about that. What's important here is you can see the strong rejection off of the zone, and then the next day price came up and we can see these pin bars that were forming here. It was constantly being rejected, so we were getting a lot of wicks. This is an easy or a gift to shorts because the risk reward is amazing. You can put your stop right over the virgin point of control or right over this candle and just target back to VWAP or target what would have been the freshest demand zone. So one thing about this, guys, is if it's difficult, if you can't identify where the high volume nodes are, then chances are it means that you're trying too hard or you're looking for something that might not be there. This is something that takes just a couple seconds per chart and you should just be able to see it, especially when you turn off the candlesticks. And when you see this type of price action, obviously it's going to be pretty difficult and choppy because Tesla's consolidating. But a good lesson to take away here is if we jump back to the candlesticks and we take a look at this supply zone, this is the first real strong breach of the supply zone. Whenever that happens, you want to take note of, because remember, every time the zone is touched, it actually becomes weaker and weaker. Because if there was an inventory of say 5 million shares up here is what some sort of institution was trying to get rid of, every time price came up, it means that, let's just say there was 2 million shares that was purchased here or exchanged at this seller. If there was 5 million in this area, and let's just say hypothetically during this 45-minute period or this 30-minute period, 2 million shares were exchanged. This person that was initially trying to sell 5 million shares, that was their initial inventory. They've now sold 2 million, so they're only down to 3 million shares. Then the next time price comes up to here, assuming they were able to get rid of another 2 million shares in that, then they now only have 1 million shares left of inventory. So then the next time price comes up to here, this is them getting rid of all of their shares. They've relinquished their inventory. So therefore, this supply zone gets weaker every single time it's touched. I know when you're a beginner trader and they tell you, oh, if you see a lot of touches at a level and it forms resistance, or there's a lot of touches at a level and it forms support, it actually makes it stronger. When you're thinking about supply and demand zones, that's not actually factual. Eventually, all of the sell orders that are here are going to run out. And if you looked at if you paid attention to the first video when I was talking about the supply and demand curve, this is our demand curve and this would be our supply curve. Once the quantity starts decreasing, demand is going to be increasing because now it's going to become more scarce, and that's actually going to drive price up. And that's what will naturally end up happening once the supply curve ends up breaking or once the inventory has run out. So if we take this, extend it out a little bit further, all the way to out here, zoom out. Let's go back to this right here and actually extend it out as far as we can. Skip the days and let's just stop right here. Now we come back to the candlesticks and let's see how price traded. We can see, look at this time, how much volume came in on this spike right here. This, in a sense, is the last bit of selling. Now, you can't blame yourself if you do buy this sort of breakout, because yes, it was a clean close on the 15-minute time frame over this level, but obviously there was more supply at this area now. So this was whoever bought right here, the same psychology. These were breakout buyers, momentum traders coming in. It was a nice, huge gap up. There was great news on Tesla, so it had a bullish catalyst this day. I believe it was the delivery numbers that came out over the weekend. It was Monday. Everyone was super excited, thinking this supply zone is done, and then it creates a new supply zone that ends up and price gets rejected. We round out, we come back up to this same area, and then price gets rejected. You can't blame yourself if you end up buying this, unless of course you had your supply zone drawn out on your chart and you would have known. However, pay attention to what happens over here. We can see how much time Tesla ends up spending above this supply zone as well as over this presumable supply zone before we actually end up pushing higher. This is the market accepting that people are willing to pay above $805 a share for Tesla. However, on this morning right here, it tested this zone one more time before pushing off. So now once we're above this zone, you can always change the level if you want. In this case, I think this zone is not worth keeping on your chart just because it's been touched so much. I wouldn't keep this one up, but for educational purposes, I'm just going to change the color for you, because this is what you would do whenever something like this happens. You would change the color, so that way if price ever came back into this zone, you would expect it to probably bounce off of it again. If we come back to this, now if we jump forward, let's actually just duplicate this right here, and here would be a point of control or a virgin point of control. I'll put the V on the chart so we know what we're talking about, and then let's just duplicate this and put our demand zone. So at this point, this should be pretty easy for you guys. I'm not going to put the demand zone over the entire value area. I just want to put it over this place right here, because this part has all this concentration of volume. Chances are, if this level was breached, Tesla is going to more than likely come down to this zone. But I'm not going to be interested in if this zone broke, because there was so much momentum in Tesla. I wouldn't expect it to go lower. If you want to get a little bit more nuanced and you are more of a scalper and you're very aggressive for day traders, you'll want to have this level on your chart also. There's no VPOC here, but you would put another demand zone right below it. I don't necessarily like to have too many of these, especially when they're this close to each other, because as a scalper, you can scalp between here and here. So from here to here, this is about 4 points. You could probably catch a 3-point scalp. If this level breaks, price would more than likely come straight down to it, especially if the zone was breached and then price came back up to this point of control and then was rejected. You're more than likely going to get a really good setup all the way back down to this level. But at this level, you'd want to close your short and then look to see if there's some sort of pin barbs that are going to form in this region like this, showing that the buy pressure is coming in to push Tesla back up to this zone here. But then once price came back up to this zone, guess what? This is going to be supply now. So you'd want to change this to red and so forth. So if we take this one, let's drag this up to right here. Here's a very fresh demand zone right there. Obviously, it was in play for today. Let's duplicate this virgin point of control right here and put this right here. So at one point, as we can see, it was touched today, so it's no longer virgin point of control. But just take a look at the price action that happened today. Zoom in right here. Tesla gaps up pretty nicely. There was actually a supply zone up here from a larger time frame. You have to look all the way back to earlier in the year. I'm not going to show you guys that in this video right now, but just know there was a beautiful supply zone right here, or maybe I'll show it towards the end of the video. But anyway, Tesla sells off, and where do we come? Right into this demand zone from yesterday. Just about nicks the virgin point of control. Again, the virgin point of control, depending on your platform, and this is Thinkorswim. Thinkorswim is going to account, this is based on Thinkorswim's volume. Certain platforms might register dark pool orders, or certain platforms might have volume that doesn't show up on Thinkorswim right away. Every platform is a little bit different. If you're using TradingView, it's also going to be slightly different, which is why I say give it a little bit of wiggle room. It's not about necessarily getting it exactly to the exact spot, which is sometimes I try to make it as thick as possible, because if we made it even 5, it's going to make the line a little bit wider, so therefore it might touch. So that's a good little tip. Make it 5 points if it makes you feel more comfortable whenever you're drawing out your points of controls. But now we can see how you can use this in play, because from here to here, so Tesla going from 62 all the way up to 74, that's 12 points. Assuming you don't catch the whole 12 points, it's at least 10 points, even if it's at least 8 points, or even if you take profit at VWAP because you're a micro scalper. This is a great trade, because in this case, your stop would be probably right below this level. Just find the most recent candle that you want to risk off of. And if we actually dived, I didn't really want to go into smaller time frames, but out of curiosity, I'll jump over to the, let's go to the 5-minute time frame and see what that looked like at this point. See, there goes that pin bar that I'm always talking about, or that hammer candle. I trade off of the 5-minute for my intraday time frame. If ever I'm being more aggressive, I like to look at the 15-minute time frame. But again, if I'm actively going to take a day trade and I'm looking to get really good defined entries, I will look at the 5-minute time frame, because once I see this is just a gift, especially if there's increase in volume right here, because you don't need to get it exactly at the point. Assuming you got in somewhere on this candle right here, your stop ends up being right below this candle, and you just make it a 3-to-1. So if this is how much you're risking, you should be looking to get a reward 3 times the size of that, or at least 2, or wherever is the most closest obvious resistance, which is usually always going to be VWAP, because this is what's considered a reversion to the mean. Now, if we jump over to Discord very quickly, I am the lead developer for an algorithm on quant trading app. So full disclosure there, if you want to learn more about this, link is in the description to my Discord. But here's an example for today. We use the quant trading app algorithm, and this is exactly where the algorithm was saying Tesla was most likely to reverse for today. So as you can see, I use usually whatever the algorithm says as confluence for what was the point of control at this point. So I was aware of the point of control. Here's what the algo was saying, and here was the 2-day anchored VWAP. So there was already a lot of confluence in this area, and that's why I made sure to point this out earlier in the chat. And the algo was also saying to short Tesla at 879, and during pre-market it ended up touching 880 pre-market. So it was a clear short from the open, in my opinion, or from pre-market, which is, I believe, someone in chat had asked earlier today, if I'm shorting Tessie, because he pretty much knew my game plan coming into the week was to look for it to come up to 880, mostly because the algorithm lets us know this on Sunday. So a few days in advance, I'm already aware of this is more than likely where supply is going to form. So the algo is usually going to say where supply is very likely to form and where demand is likely to form before price even gets there. So it's an extra way to be prepared and have an even greater edge. So jumping back to the chart, if you want to ask about what type of confluence do I use the algorithm, I look for volume, and I also look for hammer candlesticks or pin bars. We jump back to the Discord one more time. Actually, I just want to show you guys in the aftermarket section. This is actually something I had pointed out a few weeks back, actually saying if you just look for this candle right here, it's kind of the golden candle in my opinion. Whenever price comes into demand zones, again, this is straight from the algorithm, so I didn't have to draw this one out. It's not necessarily drawing out a demand zone or supply zone. It's showing before price gets there where a demand zone is more than likely to form. And we have a whole method for what type of patterns we look for whenever we're taking these trades. But in this case, this was the confluence because it was saying this particular day, this is Facebook, was more likely to reverse in this area. There was a 2-day anchored VWAP. We were on the weekly buy zone right here. And we also had a demand zone that had formed on the previous day. So once you see this candle, it's pretty much just get in. Don't even think about it. Set your stop loss below the zones or set your stop loss below the candle if you're not using the quant trading app. And there you go. You have yourself in high probability, low risk, high reward type of situation. So if we just scroll up, there was multiple scenarios that day. Here's Apple, another pin bar right in the zone. So just showing the confluence of things. Now back to the charts. Let's jump back to our clean charts. So what we would expect if Tesla now, let's draw out the next, what would be now considered the VPOC, because the previous day's point of control is always going to be VPOC going into the next day unless it's touched the next day. So let's remove the V from this one. Let's remove or not remove, but actually move this zone right here and put this over the value area for this day, because this is a nice taper of all the volume right here. So that's why I'm going to encompass this price action. Let's actually make this red, because now we want to think about what could happen for Tesla tomorrow. And I want to show something to you guys here, what a lot of the bears would be thinking. So now we have this. Let's go to the candlesticks and we can see how Tesla closed. It closed pretty much right at the POC from yesterday. If Tesla now tomorrow was to actually shoot up in the morning and actually run up to this VPOC, bears are going to be waiting to short right here because their stop is probably going to be right over the zone or right over this level. However, now we have a downtrend that's actually forming on Tesla. So assuming this happens and Tesla does something like this tomorrow and it shoots up right here, this confluence of this trend line, we have this virgin point of control, and we have this in the supply zone. That's 3 really good reasons for a bear to short Tesla. On top of that, earnings is tomorrow, so we'll leave the catalyst aside and just focus on the price action here. This is how you combine certain things. If you're a technical analysis trader and you like your trend lines and you like to use support and resistance lines, that's fine. Trend lines are great, but understanding the context of where is the trend line forming. In this case, we now have a fresh downtrend, and this is what I would consider backside weakness, because Tesla has had what's called the front side strength, and now we're starting to form some sort of backside weakness. By no means does it mean Tesla is done, because it is Tesla. They could report some great news tomorrow and we could end up shooting higher, but it's all about risk reward. Taking a short trade here or here with a stop over here, if you get down here, this is a great reward to this level. And imagine if you end up getting all the way back down to this fresh demand zone down here. From a risk reward standpoint, it's definitely favorable to the bears to be shorting here. However, if we were to clear this zone and close over it, and then we ended up checking out the volume profile, and we saw what was mentioned before as a P pattern. I believe I mentioned in the first video, if not this one. So I don't think we have any P patterns on chart. Here we go. Here would be a P pattern. If we get some sort of a P formation like this, and it ends up closing with the VPOC over this zone, that would be an indication to come in the next day and expect this supply zone to be a fresh demand zone. And if the market dipped into it at the open the following day, you can buy that dip, because more than likely Tesla will go higher. So let's keep things moving. And now I'm not going to spend as much time on Apple, but let's take a look. Fresh chart on Apple. Let's draw out our zones. At this point, this should be pretty easy for you guys. This right here would be a nice volume chunk. So obviously I'm starting with the day that is closest to wherever price is. Here was a nice P formation, signaling that bulls were very strong today. But if they can't hold over this value area tomorrow, we're probably going to end up selling off. We do have this high concentration of volume here. So let's actually duplicate this and make sure we have this drawn out. I don't necessarily trade off of these types of demand zones because it's outside of the value area. I like when there's either a point of control, which the point of control will always be within the value area. So I like the demand zones and the supply zones that are around points of control. But if you're pretty aggressive and you don't want to wait for Apple to come all the way down to here, I'm looking at 20 different tickers. So I don't mind missing a trade on one of them. There's always going to be some sort of trade, or I'm always trading the SPY or the SPX. So I'm not so concerned about catching every single trade, even though I do the work usually every day and I update my points of controls. At least I don't always update my supply and demand zones for every single ticker. I do that on the futures. I try to update at least the ES every single day before every market session, so I'm aware of the levels. But for individual tickers, I'm not constantly plotting out all of them. I pay attention to this one. So I would leave this one alone, but let's just say you trade Apple on the regular and this is one of your main stocks in your basket. You will want to point this out, because if we take a look, assuming we came into this day with this zone already drawn out, and we take a look at how Apple actually opened today, you see we opened here, and every time we came into this zone, buyers were here to defend it. So we ended up getting all of these wicks off the level, and then we pushed higher. So that's why it's important to have this level here, because if you waited for Apple to come down to here, you would have actually never got a trade. Now, because we're using the volume profile to actually draw supply and demand zones, you can see it can help weed out certain zones, because this zone you could eliminate, this zone you'd probably eliminate, and you just leave this one up because you know this would be the stronger of the three. Duplicate this now, bring this down here. So something this far away, I'll probably put the whole zone up and not try to get it perfect. If you really want to get it more nuanced, you could just leave it at this level. But then as you can see, you won't be including the point of control. So I would actually just put this whole thing here, put the point of control in your chart, and just keep in mind that if Apple gets back to 140, it's more than likely going to want to bounce. If we actually just jump back in time and draw it over this level right here, and then draw what would have been the point of control or the VPOC at the time right here, you can see 140 was a previous VPOC, and then on this day it's still a VPOC. So if Apple comes back down to here, it's more than likely going to bounce off of 140. I took a great trade on Apple here last week. I shorted the 140 puts. I did a video on it on swinging put credit spreads and why I think it's great to learn this, especially if you're a newer trader. My confluence came from knowing that it was in this demand zone, as well as knowing we were at the Virgin point of control, and also the quant trading app Algo had this as the buy zone for the week for Apple. So there was a lot of confluence here. In hindsight, I wish I bought some calls, because selling the puts was cool, but I should have used the credit or the premium received from selling those puts to actually just buy some calls. I could have bought even like the 150 call for a month out, because from here this thing made a huge move. Moving right along, let's take a look at another ticker. Let's see, NVDA here. I have my points of controls and my Virgin points of controls up already. Let's draw out our zones. So right here obviously would be a fresh, I would love for NVIDIA to come back here. This would probably be a great place to take a trade off of. And let's actually duplicate this. I'm going to point out one scenario here so we can jump to the last ticker. So right here we see this would have been a demand zone right here. Actually, we'll change the color, right? And now let's jump to this time frame, same time frame. But now we can see the candle, see what happens. Price comes right into this demand zone. And let's take a look at it on a smaller time frame. Look at this. Market opens, gaps down. Where does it gap down? Momentum traders probably selling, because if these guys are selling, there's somebody buying also. So there's a bunch of guys, momentum traders again, probably shorting from pre-market, trying to push down here. There's probably retail traders saying, oh, we broke down, support from the previous day, or whatever reason. I don't understand what would be the reason to be selling or shorting NVIDIA here when we're obviously in this demand zone and there's a Virgin point of control right here. Hopefully by showing all these examples, this is really reassuring or building the neurons in your brain of how to trade using this method, because it is universal. It doesn't matter what you trade. And it really doesn't matter how you trade. It can help improve any trading style, any method, any system of trading. I was lucky enough to read a volume profile book earlier on in my trading career, and I'll leave a link in the description down below to the book. It was by a Trader Dale, and I thought it was an amazing book. It's big. It's a lot larger than a lot of other trading books. The text is huge. He had a lot of graphs in it, so it was easily digestible. Unlike reading some option trading books like the options and volatility pricing book by Sheldon, that one's a little bit more complicated to get through. But if you're looking to trade complex option strategies and multi-legged option strategies, it's it's a definite book to read. But when it comes to trading books, the Volume Profile book, man, was probably one of the simplest and easiest books I've read, and I love it still to this day. I have it in digital and in the print, and I do reference them plenty times. So I recommend that book if you want to learn a little bit more. And then I'll also be putting out a lot more videos on volume profiles, as well as using quantifiable methods to trade, as well as a lot more spread-based content, because there's a lot of ways to take trades on these levels. You can buy calls in these levels, but if you know this particular ticker is going to struggle to go lower, you can also sell puts here and then buy a put below here, and then you just need the stock or the underlying to stay above the put that you shorted. So that's another way to use this. There's many different ways to trade, and if you just trade equity, then you know to just buy a bunch of shares here, set your stop loss below here. And one tip is, if a demand zone cracks, I don't close my position right away. I wait to see if it's going to rebid it. So if, assuming I bought here, NVIDIA went a little bit lower, and then within the next 5 to 15 minutes it actually closed over this level, I'm not going to take the stop loss. This becomes my stop loss. If we then go back lower, I'll take this as the closing order right here. Let's jump back to the profile, and then lastly, let's take a look at Facebook. Here's our charts. Again, we have our VPOCs on the level. Again, my VPOCs are always there. I'm always just constantly removing the V if it's been touched, or just shifting it and moving it up. So in this case, let's duplicate this one. And as we can see, we have a new VPOC because the market is closed, and we want to see how price will interact with this tomorrow. Let's draw out our demand zone, which would be right here. Nice fresh zone. So if price comes back to it, I'm definitely going to want to watch to see if there's indication to buy. So if I see a pin or a hammer candle. But I want to point something out for this day, and this is actually a member in the Discord. She actually had pointed this out here about Facebook, and she was asking me a question, and it actually sparked the idea to come on and show this to you guys. If we see this right here, and let's go put the let's put what would have been a point of control, duplicate this. I might actually end up doing a separate video just on this, because this is something I think it's pretty valuable right here. Let's change this. This is not a VPOC. All right, so we have a point of control. Here goes a Friday. Obvious supply formed, price pushed off of it, came back to the zone, just barely touched it, couldn't even really get into it, and then we sell off. This is the first time price actually ends up touching the zone, but it couldn't even make it up to the supply zone. It couldn't even make it up to the point of control inside of this supply zone. This right here is extreme weakness, especially since last week Thursday the market was pretty hot. So if we take that and we carry that information and we carry the narrative forward, and we would actually draw another zone right here, and this would have been another point of control for this day. And then let's go to the smaller time frame, and we take a look at this right here. So here goes the day. Now, the fact that Facebook could not even push and actually touch this point of control shows how strong this supply zone is. So then you have another day where it's just balanced for the whole day. For scalpers and opening drive traders, this is the type of information you want to look for, because you carry this information from the previous day into the next, and you come up with a trade idea that if Facebook is to break below this value area, it ends up becoming a short in this case. So right at the open, price sells off, you can enter your short right here, use your stop loss as VWAP, and just ride the momentum down. At this point, this was a demand zone here, and this was a virgin point of control. So you use the target as the previous demand or previous point of control. Not to mention the fact that there was a gap right here. So this is an A+ opening drive trade. I miss these, 9 out of 10 times, because I'm usually not looking for this type of setup. But I really wanted to just point that out to you guys. And if we just switch back to here and I actually show you, so we duplicate this again, we put this right here, this would have been our demand zone. And then I'm not going to bother, really finessing it, because this is coming around to the conclusion of this 2-part video. And it's funny now that I've been trying to make my videos shorter and shorter. And now here I am making 2 videos that are probably both very long, but what can I say? I like to show a lot of examples. So anyway, here's the point of control, which would have been the virgin point of control. Short enter right here, and then as you can see, we sell right off, and this is where you would close the trade. Instead of having to deal with all this choppy price action or this choppy price action just to get a little bit more, you might as well close the trade when it goes that well. And then again, another candlestick pattern is this 3-bar play right here. So the next short can be right here and just ride the momentum down. So anyway, this is the end of this video here. Again, I'm going to do a lot more stuff like this. If you have any questions, leave them in the description down below, or join the Discord. There's a public section that is free, so you can contact me there, and it's easier for me to respond there as as I'm answering questions throughout the day, as well as sharing trade ideas. And then if you're interested in joining the premium membership, link is also in the Discord. You can find out more questions. When you join the premium Discord, not only do you get access to me a lot more during the day, but you also get access to the quant trading app levels. It actually is a TOS script that draws the levels on the chart for us, so we don't have to manually draw out certain zones, and we kind of let price come to us. So thanks for watching, and I'll catch you guys in the next one.